Hi folks, Tim here from Insight Hawk, and today we're going to look at managing inventory. What's on the menu today? First, we're going to create standard inventory transactions using a CSV file. Then we're going to upload those transactions to our Insight Hawk platform, and then we're going to review the results. Now, the accounts that are going to be involved in this process are going to be a cash account, which we're going to call bank. There's going to be an accounts receivable account, which we'll call AR. There's going to be two inventory accounts, warehouse A and warehouse B. So imagine if you have two warehouses in your business. We'll have a revenue account, which we'll call sales, which will record all of our revenue from both warehouses. And we'll have an expense account, which will track of our cost of goods sold. Now, the transactions that we're going to be looking at are inventory purchases. So as a business owner, imagine if you are purchasing inventory using your cash. So we're going to be debiting inventory and crediting cash. Then we're going to do actual sales. So when you do a sale, there's actually two transactions that are involved. First, you need to debit your accounts receivable, thus increasing it, and you're going to credit sales, thus increasing it as well. But then there's also a second transaction, which is the expense transaction. In other words, if you sell something, you need to, first of all, record a cost of goods sold expense. So we will debit COGS, and then you have to credit your inventory. So you have to decrease your inventory for the sale that you just made because you're going to be sending that product to a customer. And the products that we're going to be looking at today are going to be basically pillows. So I'm going to simulate a pillow store. So we're going to be selling two products, a blue pillow and a green pillow. And they're both are going to cost us $1 to purchase, and we're going to sell them for $2. So it's a business where we buy something for $1 and sell it for $2. Let's take a look at the CSV file. As you can see here, I prepared some transactions. First of all, let's take a look at the headers of this file. So we have date, amount, debit account, credit account, note or description of each transaction. We have a product, so blue or green pillow. We have a quantity, and potentially we have a customer. So these are our headers. And now, first of all, we have a couple of transactions here, which are inventory purchases for warehouse A, where we purchase 100 units, or actually $100 worth of a blue pillows, which gives us 100 units, and we purchase $150 worth of green pillows, which yields us 150 units. And similarly for warehouse B, so we see that we're debiting warehouse A here and debiting warehouse B here. So this will give us a certain inventory that we can start selling to our customers. And then here are our sales. So I registered here sales from middle of January to the 31st of January. And we're going to be debiting accounts receivable. We're going to be crediting sales. So these are different quantities that we sell to each customer. And of course, we're selling each pillow for $2. So the amount is twice the quantity in this case. And then for warehouse A, we have expenses. So for each of these sales, we have to register an expense. So we are going to have to debit a cost of goods sold account, and we're going to have to credit the warehouse from which we sold this particular item from. And so here again, we see, for example, here we will be sending 5 blue pillows, and it will decrease our warehouse A inventory by $5. And exactly the same for warehouse B. Again, this is basically, the quantities are somewhat different, but the principles are exactly the same. So what I'm going to do is that I'm going to simply download the file here as a CSV using Google Sheets. Next, let's head over to our platform, insighthawk.com. So here we go. I will create a brand new workspace, which I will call my pillow store. And I can write we sell pillows as a description. So we create a brand new workspace. And as usual, we go into Data Tools, Import. We will import our transactions. So I will select the file that we just uploaded. So in this case, I did this twice before this video. So this is the particular sheet that we just saw. Our debit account will be the debit account. Credit account will be the credit account. the note will be the note, the amount will be the amount. We all already saw this before in previous videos, but here we can actually use our optional properties, and we can designate the product as the product in our product column, and the quantity will be the quantity, and the customer will be the customer. We can click on next. We will not filter anything as usual. Here we see these are the different accounts that are involved in this CSV, and they are all correctly mapped, except of course AR, which the system does not recognize as accounts receivable. So we'll just help it out a little bit by selecting accounts receivable here, and everything else is good to go. We click on next. It also says that these two products that it detected from the CSV from the product column have been detected and they will be created. Then the following customers from the customer columns will also be created. Very good. And finally, this action will create 6 new accounts, 2 new products, 21 new customers, and 72 new transactions. And we will proceed. And here we go. That's great. Finish. And let's take a look at what we have. So we can actually, to the left here, navigate to Accounting Tools and Inventory. And we can see that the system has, first of all, shows us all inventory accounts. Then it shows us a Warehouse A and a Warehouse B account. And these two accounts can also be seen in our chart of accounts. If we actually go into Current Assets under Inventory, we see that we have 2 inventory accounts, Warehouse A and Warehouse B. So if we just go back here, so it shows us that the 2 inventory accounts combined, we have a total of 151 green pillows in our inventory and 114 blue pillows in our inventory. And in particular, in Warehouse A, we have 81 and 70, and Warehouse B, we have 70 and 44. Now here, total inventory value by cost and price, simply it shows 0 because we did not actually indicate to the system that we're selling every product for $1. Selling it for $2 and buying it for $1. We can change that here very, very easily by navigating to products. And these are the products that the system has created for us. And we can actually edit them by adding a $2 price and a $1 cost for the green pillow. And then we can do the same thing for the blue pillow. So it is very simple, very straightforward stuff. $2, $1, here we go. So again, product listed price is 2, product listed cost is 1. And now using these numbers, if we head back to inventory, now we see that the total inventory value by cost is 265 and by price is basically double that. So if you were to sell all of your inventory right now that you have on hand, you would make $530. This is what this number is telling you. And here, for instance, let's select Warehouse A as an example. We can actually navigate a little bit lower and we can see this table, which shows us a little bit of information. So basically the quantity that we have on hand, the current price, the current cost. And actually the interesting thing here is the average units that we sold per week in this case. So here we're selling about 2 units per week of the green pillow and basically 1 unit per week of the other type of pillow. And also based on how much inventory we have on hand, this tells us that we have 35 remaining weeks of this product. If we keep selling at the same rate, we will basically run out of inventory in 35 weeks, which is a useful metric to have in some cases. We can also head to reports and we can produce an income statement for, in this case, for the month of January. So we can choose from January 1st to January 31st. And we can produce an income statement. And we can see here that we generated $370 worth of revenue in total. And then our COGS was 185. Again, the revenue is twice the expenses, as we saw. And we have a total profit of $185. So all these metrics are quite useful. I hope this demo was helpful and I hope it demonstrated some of the ease and power that InsightHawk has in terms of providing inventory and inventory management. I hope you enjoyed this video. Like, share, and subscribe, and I'll see you guys next time. Bye.